So is a private lender. So it can be any person or a business that it's not institutional, right? So an institution can be like a bank, a credit union. So it can be a person, it can be a low income earner, a high income earner, it can be a small business, it can be a big business. Okay, so it can be anyone that has a capital and is happy to lend money to another organization, another entity in exchange for profit, in exchange for for interest. So let's give an example. So let's assume that there is someone who wants to, let's call them James, okay? So they want to buy a house and the house worth is 100,000. Okay, so what's James' options? The first option is very simple. So James need to bring $100,000 in cash, right, to buy the house. So that's pretty straightforward. The second option, maybe John has a good credit score, but it may have it may be a bit short of cash, right? So what can he do? He can put like 20,000 down and go to Chase or Bank of America and borrow the other $80,000 to finance this property, right? The only thing that just need to be aware of, he needs to maintain a good credit score. He needs to have a good history of employment, and he needs to have a good ratio between how much is the loan gonna cost him per month. So basically, the bank needs to make sure that he can afford this loan. So he just needs to jump through some more hoops, right, just to get this loan. And the third option, let's assume that John has only $20,000 cash and he can't get any approvals from the bank, or he doesn't want to work with the bank, okay? So he can go to any person, maybe it's gonna be yourself, and assume that you have like $80,000 to invest or to lend. You can lend him $80,000, okay? And basically you can become his bank, okay? So let's summarize. So there is a $100,000 house, okay? James, put his skin in the game, put $20,000 down, and you lend 80%, which is 80,000 of the value of the property. Okay, so why do you want to do it? The reason why you want to do it, so first you have a property and you have a very good collateral, right? So there is a house, maybe you also know this person, so he lives in the house, so he's going to be an owner occupied, okay? So he's going to look after this house. As a lender, you don't really care about the asset, you just want to make sure you have enough protection and also the value doesn't go down in value, right? But it's probably, if it's real estate, it's going to go up in value, maybe, I don't know, 2-3% on average per year. Okay, so basically, so just to summarize, anyone can be a private lender as long as it's not institution. Okay, and so if you want to keep learning about private lending and how you can make high returns in your money without having so much risk like you have in the real estate market as rentals or in the stock market, just following me on over here. So we're gonna produce try to do on a daily basis just to try to educate you how to become a private lender and get your early retirement. Talk to you soon. Bye.